We will continue to the question number 2 for the A-level accounting structure question. And this question I picked from the year 2021, paper 21, May, June. Okay, Caris and Lara are in partnership. Seek 2 reasons why partner may each have a separate capital account and current account. Why the company, the business, or the partnership need to maintain of it? The purpose of it to maintain the 2 accounts. For capital account, if we maintain separately, it will help us to calculate the interest on capital. If we do not have, then it's difficult. If we combine both account, capital and the current account, then if we have the difficulty to calculate the interest on capital end of the year. And it also helps us to know that how much the capital invested by individual, so that it will help to know, in fact, the money from them is how much actual for capital, how much through the business over the period, which is that they kept in the current account. So easier to refer the actual money to be invested by the partner. And this account also is for us to maintain unrealized profit. For example, your revaluation of the account, revaluation of the asset. If you have any goodwill due to the new partner, joint retirement of the partner, so we have to cap into this capital account. So this is unrealized profit. For the current account creates because we want to monitor the movement of the year. We will know that how much the year profit share, how much the income earned by the partner, how much the profit share, how much the drawing taken. So this will help us to monitor the movement of the year. For example, the salary, the drawing, the profit share. So if we see from the current account, if there is an excessive withdrawal from the partner, so we will be trying to prevent with charging the interest on the drawing. So there is a reason that could be the reason that we use to separate the capital and the current account. Next, Caris and Lara share profit and losses in the ratio 3:2 respectively. So as I say, it's good to separate, is to list out all the agreement that they have. First is a share of the profit. Share of profit ratio, which is 3:2, which here is Caris, and then here is Lara. Okay, this is information that we have. They decided to admit Megan as a partner. So there means new partner joining. So when there's a new partner joining, so this is the old partner asset and liability. See what other criteria they set into the question. The partner agreed to the following on Megan admission. Current account will no longer be used. So it means that this account, these two accounts, since it's not in use, we will transfer to capital. Okay. Next is number 2. Caris took over a motor vehicle for private use with a net book value of 18,400 at the agreed value of 15,000. That means there is a loss on the revaluation of the asset. Goodwill was valued at 48. No goodwill account was to be maintained. As usual, when there is a no goodwill account to be maintained, we have to write it back. So what we got to do is, let's look into number 2 first, okay? So here, let me copy down to there, easier for us. So the current account, what is the current account at the moment? So the current account for Caris is 3110, and then here is 5.0. This is a bracket. Next is Caris took over. So this motor vehicle, Caris took 15,000. So loss on revaluation on motor vehicle. This is for motor vehicle. So the loss is 18,400 minus 15,000, so 3,004. Next is goodwill. Goodwill created. So goodwill created is 48,000. So no goodwill account to be maintained. So we find the calculation first. So 3 divided by 5. So it's 28,000. And then here is 2 divided by 5. So this is goodwill creation. And goodwill written off. I'll put into here. For another Megan. Okay. The goodwill written off adds a new ratio, which is 7. So the new sharing profit, this is the old, this is the new. This is the old ratio. So when we write off, we have to use the new ratio. So here, 48,000 times 7/15. And then Lara is 5. And then here is 3. So this is a goodwill. Next is profit and loss to be shared, 753. Megan introduced, okay. Megan introduced motor vehicle. And the motor vehicle amount is 23,000. Okay. After making the adjustment, it was agreed Megan should pay sufficient cash. But how much the cash, we don't know. But they say that her total capital equal to that of Lara. But how much the Lara final capital? Then we have to calculate first. So in here, they given us a capital account, which is they ask us to prepare. So we can use the capital account to find how much of it. Capital. So Khalis, Lara, Megan, and then same thing. Next, we put in the color. Okay, so that easier to see. Okay, the first we have opening. Put in the opening first. Balance brought down. So what's the balance brought down for Khalis? So we have 3570, and then we have 2450, because this is new partner, so don't have. And we know that from the information here, motor vehicle 23,000, cash we do not know. So we put in the information in here. The question saying that transfer the current account, because you see that no longer used. So we need to close account. The double entry is debit current account, credit capital. So this is a current account. How much the current account? 3110. And then here is 540 because it's a debit. So current account. Okay, next is that motor vehicle taken by Khalis. Okay, motor vehicle taken by Khalis is, which is 15,000. Okay, and then the revaluation of the set is only F1, which is 3,004. So this 3,004, we have to calculate how much to be shared among Khalis and Lara. So loss on revaluation. Okay, here we calculate, take this amount times 3/5. Okay, times 2/5. So this is the amount for the losses, which is we need to debit capital. So here, loss on revaluation, okay, which is 204. 1360. Okay, the next one, goodwill creation, which is in the credit side. Goodwill creation, which is enjoyed by the old partner. The old partner get this amount and this amount. Okay, Next is that goodwill written off. Goodwill written off, which is three partner also have it, which is in here. Okay. And Megan, it contribute the motor vehicle. So the motor vehicle is 23,000. So now, how much the amount that need to be paid in cash by Megan? Because they say that in here. After making the adjustment, it was agreed to pay is into the business bank account. So in this case, this one, the cash will go to the bank. So we have to put the into the bank. Cash go to the bank, but how much of it? This is what we're going to find later on. So what we got to do now, we need to calculate how much the differences for the both. Okay, we look into Kali's first. Kali's credit more than the debit. So the balance carried out for the capital account must be debit side. So we take the credit minus debit. So this is the amount balance carried out for Kali's. For Lara is so 25,800. And the question saying that the total capital equal to Lara means that this amount for Megan must be same to this. So to find the cash, we take the debit minus the credit. So we get this amount, bank amount will be 12,400. So complete the account, balance what down, balance carried out. So we done for the capital account. So the next is that, let's see what's the question about. Okay, in addition information, they say that the new partnership agreement, Lala is receive a salary of 12,000. Megan is hoping to achieve a 25% return on her capital employed. So what is a capital employed? Capital employed. ROCE. The formula for ROCE is that the capital or the equity plus the non-current liability. Okay. So how much that Megan contributed for it? Megan only contributed the amount, which is the, based on the calculation, the capital is 25,800. So to find the profit should be received, profit to be received by Megan in order to get 25%, okay, return on the ROCE, means the amount for it should be taking 25,800 times 25%. because this is the capital that she invested. So based on the calculation, it should be 6,450. So this is the amount that she will get for the profit share. How much the profit, the minimum profit in order to achieve this target? Based on the ratio, Kalis, Lala, and Megan, they are getting 7, 5, and 3. So this is a ratio. And in order to get the profit share, which is Megan 6,450, then how much these two will get? So to find the total profit, we need to know how much the total profit share. So we have to take 6,450 divided by 3 times 15. How to get the 15? The total here is, the ratio total is 15. Take this, divide by 3 and times 15. So we will get 32,500. This is the profit share. The question is asking profit for the year, minimum profit for the partnership. So to get the minimum profit for the partnership, we have to take the 32,250 plus the salary to get the profit for the year, to which in order to achieve the profit share for Megan is 6,450. So this should be the answer for it. Okay. Now next. State 2 possible reason, possible disadvantage of admitting a new partnership. Disadvantage means, which is, we did question before about the admission of the new partner, benefit, and the disadvantage. So the question is asking the disadvantage. So what is the disadvantage that we will get if we admit the new partner? Mention first, if you have profit, then you have to share with more partner. That is not good to the existing partner. So means that share of profit. So this might cause the lesser profit to earn by existing partner. So this is disadvantage. Second advantage, what else could be? If we have more person in the partnership where all can make decision, so we take longer time to make final decision. So longer decision making. So what is the problem when you have longer decision making? It could be because the business may lose opportunity or lost business opportunity to invest new business, because take longer time to discuss and everything. By the time finalized, the opportunity taken by others. And also more people, they can cause the argument and disagreement. So what could be the problem for long term? May cause the partnership dissolve. may cause partnership to be dissolved. So this is a risk of when we form a partnership, when all the partners did not agree with each other, can't proceed with the business movement, affect the business, then we have to close down the partnership. So that could be the answer for it. Okay, so we stop in here.